We have Feroze Azeez, joint CEO of Anand Rathi Wealth, joining us this morning. Feroze, good morning. First, help us unpack the mood of the market. IT stocks, as expected, reeling under a little bit of pressure this morning. But beyond that, it doesn't really seem to be a stress point for the markets that tariffs will be announced on copper as well as on pharma. So first up, the mood on Dalal Street this morning.
Good morning, Kartik. I think the mood is reasonably subdued. It's reasonably lackluster. It is sideways, and that you see in this full expiry of this first expiry of July. That's largely because on 1st of July, the derivative circular has come into effect, where we move from notional values of options and limits being set on notional values to delta values, which happened on 1st of July. So the entire derivative market is trying to recalibrate. Now, like, for example, if I'm a derivative trader, I'm going to recalibrate all my positions from notional value and try and devise a strategy which actually brings in agility to the new-found methods of doing options market. So I personally think you will see sideways movement, and that's largely because of the 1st July, and that's why you see this expiry tomorrow.
All right. So that seems to be the larger context on why we are seeing the lackluster market. But I'm surprised, Feroze, this morning that despite Donald Trump's announcement of 200% tariff coming on pharmaceuticals, though he's given an 18-month window for them to localize manufacturing in the US. But all pharma stocks seem to be in the green territory this morning, and that's fairly surprising because yesterday we had seen that this particular sector was reeling under a lot of pain. We had stocks like Dr. Reddy's which were down more than 2%, and this morning there is some gain. In fact, now a flattish tone that we are seeing on Dr. Reddy's. Similarly, Sun Pharma, Cipla, Mankind, Lupin, all registering some gains this morning. What is driving the optimism in the pharma sector this morning?
Kartik, if I look at it from a short-term standpoint and then medium-term standpoint, first let me start with the medium-term standpoint. Last year, the earnings of pharma were just stupendous, right? It has 20 stocks in Nifty Pharma, 3.2% weight in Nifty, 4.6% weight in NSE Nifty 500, and 46% is the free float of this index. So it's a low free float index. 46% is one of the lowest free floats in any of the sectors.
Okay.
What has happened? And it has given a growth of almost, if I remember right, 673 rupees was the earnings on Nifty Pharma, which implied a 28.5% growth in earnings last year, which I think is something which didn't pan out in prices. Why didn't that pan out in prices? Because there are different kinds of owners of the stock, or a sector at least. What happens is the frothy FIIs sell at the drop of a hat, especially those hedge funds have already sold pharma. So you see very little frothy ownership in this sector. So any sector which has very low frothy ownership will do contrary to what the news says, because news wale ne to bech diya hai pehle se. So we identifying what is the froth in ownership in each sector helps us decipher non-palatable directional movements in sectors. The reason why pharma is positive is because जिसने बेचना था वो बेच चुका, frothy ownership खत्म हो चुका.
So yesterday was the frothy ownership that gave way to the stocks tanking, and this morning is the serious investors who you believe are still plugged into those stocks. So for somebody who is a long-term investor, a retail investor looking at the long-term story, invested in pharma stocks, what should their strategy be given the news that 200% tariff is likely to hit those stocks?
See, I would take that with a pinch of salt, because the pharmaceutical industry in the US, which is practically government funded, 90% government funded there, they cannot expect that kind of inflation. If they are actually penalizing us, they're indirectly penalizing their own citizens. So I don't think...
And that's true for tariffs of all kinds, isn't it, Feroze? And that seems to be perhaps one of the reasons why we are seeing even the South Korean and the Japanese main indices not really reeling under any pressure ever since that 25% tariff came in.
Absolutely. You're so right, Kartik. It's like inflation is a big challenge for the US. They're not able to do any quantitative easings looking at inflation. So they are trying to see how they can up the 2.5% total tariff number percentage. That's the US imports. 2.5% is what they have. And if they could move it to 7-8%, that will almost mean $700 billion. That's what they're trying to push and pull and get to. And there are some sectors which are largely government funded. That's where their liberalness in terms of tariffs will show up over a period of time. So I think because everybody was negotiating knows that pharmaceutical is one space where you can't have very heavy tariffs because the government's expenditure is not easy because it's aging population. US has $336 trillion. So coming back to the point which you made, that's precisely why the bluff has been called, that it's not going to be such stark tariff numbers. At the end of it, the average tariff of US imports will move from 2.6% to about 6-7%, is what is my guess.
All right. And that could be the reason why we also heard Treasury Scott Bessent yesterday say that the $100 billion in tariff could at best go up to about $200 billion and perhaps nothing more than that. So the 2.5, 2.7 effective rate could, like you're saying, just about double to maybe about 6% or so. But another important sector in news this morning happens to be the metal sector. Again, 50% tariff on copper. Earlier, we only heard from Donald Trump that it's going to be steel and aluminium, and now copper has also been added. And we are seeing some impact of that on the metal stocks this morning. Vedanta is down about 1%, and so is the case, in fact, with Tata Steel, which is down more than about 1% or so. So no froth in this sector. Can we assume that? And this is something, the movement on the charts is something that we are seeing purely on the basis of news that came out last night, Feroze?
Yes, Kartik, I think, see, when it comes to metals, especially copper 50%, which has been spoken about, of course, I again don't take that too seriously, but I think we are the third largest exporter of copper after Saudi being second, if I'm not wrong, to the US. So I think this is one sector. Metal sectors are high beta sectors. High beta sectors have lower fundamental owners and more frothy owners. That's why they are high beta. They move on news. That's why they throw up a relative risk more than Nifty. So I would call metal as a high beta sector. In turn, fluid ownership is larger in this sector, and free floats are larger. Free floats are lower. So I think this will certainly have some short-term impact on the metal stocks, which have had a reasonable good run from a short-term and medium-term perspective as well.
All right, Feroze. And finally, I want to look at the IT sector also, which has a direct sort of implication on inflation data that comes from the US. So the fact that tariffs are going to at some point lead to inflation. How much inflation? We don't know. How the US Fed Reserve is going to react, to inflation data, especially because end of the month is when the FOMC is likely to convene, 29th and 30th of July. Unlikely that they will go ahead with a rate cut this time despite Donald Trump's pressure. But the point being that inflation is likely to be imported into the US, and a direct bearing of that is likely to be on India's IT sector. And of course, this also in the context of TCS likely to announce its results tomorrow and also give guidance for the next quarter and rest of the year. How do you feel the IT sector is poised for, let's say, the rest of the year ahead?
Of course, the surprise, I think, is priced in the IT sector because that's the obvious collateral damage. Like you rightly correlated, the US inflation and in turn, some degree of impact on the Indian IT sector. Since IT sector is here in India is a service sector, not a product sector, servicing the US. And I personally think IT sector has 10 stocks in Nifty IT. I personally think that the weightages of Nifty in IT is 11%. What I'm trying to get to is in NSE 500, we have about 8.3%. Any sector which has a larger weightage in Nifty and lesser weightage in NSE 500 implies that they will get the benefit in the long run of index fund investings in India.
All right.
So that's why I think long-term demand and supply IT will do well. From an earnings standpoint, they delivered 10.1%. My earnings estimate for IT, surprisingly, I'm sure contrary to the most belief, will be about 15-16% on the PAT number. Okay. And if that panned out, I think it will be a resilient sector in spite of the uncertainty which the US throws up for the sector directly.
All right, Feroze, Azeez, as always, a pleasure having you right here on News9. Thank you for all those inputs.